Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, taking a look across the board, it was a nice day for the brand new year here. Dow Jones was up triple digits, up and over 100 points. S&P, Nasdaq, Russell, all positive on the day. The surprise was the pullback in the crude. We actually saw the crude running up past some resistance levels, looking like it was about to break out before going 180 degrees opposite, selling off towards the end of the day. We saw gold and bonds trying to fish out a bottom, and as always, we'll see this in the charts, but we're going to start off our analysis with the S&P 500s on the dailies. So folks, here's the S&P 500s. One of the things we were mentioning on the S&P 5s is that even though we're kind of breaking down below some potential support areas because of the holiday lightened trade, one of the things we had mentioned is we need to wait till the volume returns in 2017 to get a better picture for how traders are going to start positioning themselves, how big institutional players might potentially rebalance their portfolios. So here on the S&P 5s, the main area we were looking to hold is the 2215s. As you can see, we healthily, very easily maintained those levels. Now, the other place I was looking to was the 2250s. And the 2250s, if we zoom in here on an intraday chart, you can see the 2250s was a prior area of support, very short term. We did fade down below it last week, Thursday and Friday, the last 2 days of trade in 2016. But as you can tell here on Tuesday in 2017, we gapped above it. We kind of faded right at that level at the 2250s. We had a late day pop, closed us above it. So far here, folks, we're still within reach of potentially hitting those new highs up at 2277. So it would be new all-time highs on the S&P. And if you start to fade down below these 2250s, again, watch these areas, the 2215s, 15s. That's the place that I would need the S&Ps to hold to still maintain a somewhat bullish or optimistic outlook on the market. As we head over to the Nasdaq here, the Nasdaq also had that similar fading feel towards the end of 2016. We got down below the 5400 whole number. That's a prior area support and resistance. But the same comments that we made on Friday hold true, which is we had that light holiday volume trade. Very hard to determine true buying and selling demand at that juncture. So coming into 2017, first day of trade, we popped above it, maintained those support levels. And so far, things look pretty good with the Nasdaq here. As long as it maintains those 5400s, you can see here how we actually gapped above this level, faded down right to the 5400s, and hung around there for a good 3 hours here today before catching a late day bounce, closing up near the 5430s on the day. So Nasdaq, even though it's been the relatively weaker index over the last 2 months, still maintaining some of these important critical levels. New highs on the Nasdaq, we would need to go out and take out those 5500s. You can see here there was like a little intraday attempt at 5512s that was not held. So any close above the 5500s, I think, would be a positive development for the Nasdaq. And really, you're going to need your big stocks like your Facebooks, your Amazons, to start turning the corner, forming right sides of bases, getting above their 250-day moving averages. That will do a lot to pull these Nasdaq back into a leadership position. Now, as we move over to the crude contract actually came off today after looking like it was staging a bit of a breakout. We were watching these 5450s up above. We actually broke up to 5520 before turning tail, closing the day down near the 5250s. So even though we have a little bit of a pullback going on in the crude, we are still putting in higher highs, higher lows, and as long as we maintain above the 4920s, I think that this breakout, longer term breakout we're looking at here, still holds intact. However, if you start to find yourself below those 4920s over the next few sessions, potentially that could be an issue for this breakout, attempted breakout that we're doing here, a potential bottoming pattern that we've seen here on the weekly charts going back almost a year and a half, right? Kind of like an inverted head and shoulders. So any trade down below those 4920s puts that in danger. As we take a look at the gold charts here, gold putting in an attempted bottom as well after a very, very protracted downtrend after the election. prediction results, putting in a bit of a bottom here right around these 1150s. So if we zoom into the intraday charts here, I think a trade up and over the 1170s could potentially put a test of the 1200s within possibility. But as you can tell here, still just in a bit of a no man's land, just a bit of chop. Obviously, if you sell down below the 1125s, that actually puts those earlier lows down at the 1050s, almost about 75 points lower. Those put those into play. And then as we move over to the bonds kind of finding some support at some longer term lows. And same thing with the bonds. If you take a look at the intraday charts, if you get above maybe these 124s, you might stand a chance of a little bit more of a retracement higher. Or any trade below the 120 evens puts in that weakness that we've been seeing into the bonds back into play, right? So higher yields, lower bond prices. So watch those different areas. Now, as far as the stocks went today on the equity analysis, no real trades that triggered today. One of the things you'll see across the board is the stocks gapped up first thing in the morning. One of the things that we're very cognizant of and careful of are these big gaps in the market. Typically, it's best to just wait out the first several opening rotations to let trade and volume settle out. And it's a good thing that we did that today because this saved us on a lot of trades where stocks triggered potential buy points and then faded away over the next 45 minutes. And that's the same thing that happened here. Nasdaq gapping up very strong into the morning, fading away. Same thing with the S&P 5s. Gapping up very strong, right? You can see this big gap running up and then fading off throughout the mid-morning session. So just an example of how this plays out in your stock trading. We look for the best relative strength stocks as they break out, but there's very distinct times and setups on intraday charts and also the analysis of the volume that we're going to be looking for. And typically what we try to avoid are these really big gap ups or stocks that run in the very first opening ticks because generally spreads are wide during that period, the spreads between the bid and ask, and also the trade is volatile. And this actually saved us here today on a stock gapping up, triggering buy points early this morning, only to fade for the next hour and a half, over $1, $2 lower here on this stock. And that's just an example of why you have to have a very sound set of trading rules and the discipline to follow it. So as we head into 2017, folks, game plan has not changed, right? We're still going to be looking for the very best stocks, high relative strength stocks, breaking out of recognizable chart patterns, preferably on volume. And folks, we're going to be looking for these stocks. We got to stay disciplined. And other than that, wishing everyone a great trading day ahead and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.